Marcin, welcome to the show today.
Thanks for having me. Super excited.
Yeah, we're going to talk all about capital raising here. And before we do that, what's your background? Because you've done a lot of kind of cool stuff. So tell us, give us a little background on yourself before we get into it.
Yeah, sure. I've been at this business for about 20 years. I got started in my late teens, early 20s. I got hired into private equity. So I drove across the country and started working with a PE firm. And our big client at the time was none other than Ken McElroy with MC Companies. So Ken McElroy was, remember, '07, '08, the world crashed. There was no capital anywhere, right? So Ken McElroy did a deal with the firm that I was at. And yeah, we ended up raising a couple $100 million for him. So I got a taste for blood. I loved the business, loved the game, apartment building, syndicating, and yeah, one thing led to another, and I've had the good fortune of raising multiple nine figures now for a lot of different things, and yeah, still doing it.
How does a 19 whatever year old get hired into private equity? How does that happen?
I talked my way in. I basically wouldn't let him go. I met a bunch of guys at a conference, and I was like a dog with a bone. I'm like, looky, I will sort mail, I will carry coffee, I will press suits, I will do whatever. I don't care. I just want to be in the room. And they said yes, and we never talked about salaries or compensation or anything. So before they changed their mind, I literally just got in my car, packed everything up, moved my life across the country, showed up in the office before they, and it was funny, it was because it was 2 months before they realized they hadn't been paying me yet. And I didn't care because I literally just wanted to be in the room so that I could prove that I could stay in the room kind of thing. You know what I mean? So, and dude, it was like drinking from a fire hose. I didn't know what an offering memorandum was, PPM, legal. It was all. I'm at home. You guys remember before Google, it was Ask Jeeves, askjeeves.com. So I'm like asking Jeeves, like, what is it? Like, what is this? What is this? What? Because I'm in meetings with guys twice, three times my age, and they're telling me stuff, and I'm like making notes about things. I have no idea what words I'm writing down because I'm learning underwriting, deals, structures. I'm learning everything all at once, and yeah, I mean, it was fun.
So you basically offered to do anything and everything. How
Yeah.
how did how did it progress? Like, and also how did you behave? In other words, it sounds like people actually spend time with you, but maybe not as much time where you were a burden. How did you make it so that you were getting access to this knowledge and just training these people? How were you behaving?
I found out that nobody wanted to raise money. Nobody wanted to pick up the phone. Nobody wanted to call clients. Nobody wanted to check in with people. Nobody wanted to do like the things that they thought was below them. Everybody that wanted to do like the fun shit, like look at the deals, do the analysis, go negotiate the transaction. But nobody wanted to do what was required to make the whole thing run. So I was just like, you know what, screw it. I'm going to put all my time into doing the thing that nobody wants to do because then everybody's going to want to talk to me. So that was literally my philosophy. And in hindsight, it was probably a good decision.
So what is your how did you start raising money? Now you said you saw this gap, no one wanted to do it, no one was doing it, and so were you then taught how to do it, right? I mean,
No, no, God, no. No, we did. So we had the firm had like thousands of old leads, and it was basically like calling the yellow pages. So I was calling people up that may have come to an event or dinner or responded to some kind of a mailer or some kind of newspaper thing back then, right? Like I was just calling people. I was like, hey, do you remember once upon a time? And I was trying different versions. And if you guys remember like the old video games, the 2D stuff, like the Super Mario's where you're running across the screen, then you die. And then the next time you jump earlier, and then you get over that, and then you die later. Well, so when I was making these calls, I was doing two, 300 dials a day just to figure out how to talk to these people about things. And then once I found people that were actually interested, I then brought those leads, requalified leads back to somebody who knew how to talk to them. That's literally all I was doing for the first year of my life. And while I was doing that, I was bringing in so many people that were interested that these guys were taking an interest in me, and I'd have an opportunity to sit in the rooms. They'd bring me to meetings, especially when I would set up a meeting with an investor. I'd get to see them pitch to the investor then, and I start to like I earned my way into the room, if that makes sense. And I wasn't asking anybody of anything. I was just earning my right to be there.
So after all those reps, I know nothing about raising capital. Let's say, what would you say is what I would need to do to get someone interested in investing with me?
I love how you frame that question because it's interested in investing in you or with you, not in the deal. Because 20 years in the business, I've literally learned time and time and time again that they make a decision based on you within the first 30 seconds. And then the value of your idea is the thing that keeps them at the table or not. So to answer your question directly, I literally, the biggest thing I focus on today with myself, my clients, whatever we do, is getting very clear on what we call your unfair advantage. So what is the thing that that you're able to, the story that you're able to tell based on your why, your background, your thesis. And it's almost like being able to tell a story in a way where whether you're 20 or 60 years old, like the things that you've done over your life have brought you to where you are, and you're like the right person in the right place to work with like right now. And if you can create that story and that narrative with people, it almost doesn't matter if you're buying apartment buildings or if you're looking to raise money for storage, or if you're looking to, whatever it is, the investor is buying into you first. And that's, so the biggest advice is literally focusing on being able to tell your story and position yourself from a position of, strength. That's really what it is.
So you were spent a lot of time on basically cold leads, doing a lot of outbound, setting calls for the actual person who knows what they're talking about. And again, I mean, no one wants to do that kind of stuff, right? People just want to take
No.
calls and check the bank account for the wires. So that's a very important activity, being able to essentially generate meetings. And so that's what you did, because there was a giant gap in there. And then the other thing is, you probably want to start to kind of take those investor calls as well. So that required you to learn whatever the investment was, so you can speak to investors. And
Yeah.
how much did you really have to learn about? In other words, how learnable is this skill? Because some people think, oh my gosh, it's going to take me years to learn this investment vehicle, whatever it is, multifamily or private equity or something else. And how much is knowing people? What did you have to do to be able to have an intelligent conversation with investors so they actually took you seriously?
So everything that you teach, that I teach, is learnable. There is no, hey, I wasn't born into a rich family, or, my parents were blue collar, whatever. None of that stuff matters. All of that's just BS. Ultimately, everything I did, everything you teach, whether it's multifamily or capital raising, is learnable. It's just, are you coachable? That's the biggest thing. And in my teens and in my 20s, if you were doing the things that I aspired to do, I would just copy you. I would just learn, copy, and then just emulate the things that I want. Like, Tony Robbins says, success leaves clues, right? So ultimately, I was always looking at what is that next skill that I wanted to acquire. And when I looked at capital raising and multifamily and deal structuring and private equity as a whole, I was like, in my mind, I was building the skills. So you can look at it from, obviously you have the asset management, you have the acquisition, or you have the capital market side. So my skills, I was like, well, I'm good with numbers, but I don't want to spend all my time with numbers. Management, I can manage and build and scale, but that for me, that doesn't like fire me up. Like, man, I really want to figure out like that. I have humans like this, and I'm sure you do too. They love to tinker and be efficient. Whereas the capital raising was it was like the black box. Nobody really understood it. So I'm like, that is hard. I want to figure that one out. So for me, that was the one and then I just decided to start building the skill, like the micro skills to get the meta skill. And initially it was, like you said, getting the meeting. Then I got the meetings, and eventually I was setting up so many meetings that guys didn't have time to take them. So they'd be like joking, like, well, take the meeting. I'd be like, sure. So I'd sit in the meeting, and then I realized I'd have no flow, or I wasn't good at, and then I learned the next gaps that I had, which was setting a good frame for the meeting, to your point, to be able to have someone take you seriously, doing a good discovery so I could figure out how to figure out if we can even work together, and then almost like holding them accountable to the outcome they wanted and matching it up to what we were doing. So those were all like, again, like the video game, the 2D, the dude running across the screen, dying, running across the screen, dying. And then eventually I had someone tell me, okay, yeah, I'm in for the minimum on one of these funds. It was like a fund to fund thing. It was like 10K. She's like, yeah, I'm in. I'm like, great. So I'll be right there. She goes, what do you mean? I'm like, well, I'll be there to pick. I was so terrified that she would change her mind. I drove 3 hours to go pick up the check. Like, it was just, it was just like because to me, getting a check was new. So I'm like, I will do anything to make sure this thing happens. And then, you know, yeah,
Martin, I got a question. So a lot of what you're talking, you said it's teachable. What I see a lot of in our space is owners that are taking the calls direct with
yeah,
investors themselves. Okay. And that's they do it because it converts, which I agree with. I can convert the leads better because I am the one that's driving the business, for example, right? But I don't necessarily love to do that. And so I want to scale that away from me. Have you figured out a way to successfully do that? And if so, what do you suggest is that to get these owners out of that position where they have to take all these calls themselves?
yeah. So, and for context, Garrett, I mean, I've had the good fortune to speak on this in front of thousands of RIAs across North America, like literally that concept. So yeah, there's a few key components to it, but in my opinion, the biggest constraint most owners have, and I'll get to this in a second, isn't actually dealing with qualified investors. Because if you ask an owner, would he spend an hour on the phone with somebody who's going to write a $250,000 check? 10 out of 10 times an owner is going to say, yeah, sure, it's high leverage activity, 250 grand in an hour. Yeah, I'll do it. So that's not the issue. The issue most owners have, in my experience, and maybe you guys see something different, is that they're getting on calls with people that are not qualified. So they're showing up to calls and they're dealing with people that are still thinking if they're going to invest, not when and how much. So, for example, for me, I'll still take calls with investors because they're coming on just as a validation of the decision they've already made. That's a different frame. I know I have 8, 9 figure entrepreneurs within my communities. They'll always hop on those calls because at the end of the day, 250 grand to talk to somebody for 30, 45 minutes. Sure, no problem. Let's do it. I'm in the car. Let's have that call. It's the person that wants to put you through the entire process and make you dance for your supper that typically irritates the owner because he's in the middle of ordering drywall or he's about to sign off on a term sheet on a loan on a new deal and now he's going to talk to this guy and basically explain the whole process. So uh, the best answer for what you're asking is really getting clear on what has to happen before the owner actually meets with the person that they're talking to. That's one thing to make sure you're vetting people out appropriately and you're creating sort of soft off ramps for them before they even talk to you so that you don't have to deal with them until they're beyond the information gathering stage. Now, the other piece is once you do actually have a team that's big enough where you have enough qualified leads, that should be the last thing you delegate. So before, in other words, I'm of the belief that an owner shouldn't be delegating that call until they've got it to a point where all the leads that they're getting are just like banger leads. And it's not just if they're going to invest, but when and how much. And when you get there, then you can create a process where you have a strong script for an upfront contract. You can have a good discovery process and you can really vet out a qualified person to either decide whether they're putting in 50 grand for their first shot or 500K. So those are my thoughts on that.
Yeah, it's very, very similar. I mean, just a normal conducting normal sales call is kind of lead quality
Mm.
and lead readiness. And there's a lot of stuff that you can do to lead to get them more ready to invest, obviously.
Yeah.
And so let's say, and when you're just starting out, raising capital, right? You don't have the luxury of lead flow and lead qualification, that kind of stuff. How would you, how would you advise someone to conduct the meeting?
Well, so before you even get into a meeting, because it's a very long answer to a question, but before you even get into a meeting, in my mind, I always teach people on my team I created something called the EASY method. EASY stands for exclusive, A is abundant, S is scarcity, and Y is your allocation. So it's a really simple framework. E, exclusive. What are 3 to 5 things that make your deal exclusive? Now, if it's a syndication, you can say, hey, we're buying this for half of what it is replacement cost. The rents are $400 less per unit than the neighbor. And it's right across the street from the brand new hospital that employs X amount of people. Whether you're a plumber or investment banker, someone's going to understand that, right? So you get your pitch sort of organized. A, abundance. it's important that your team, your IR team or the owner is very clear on the fact that they're not coming from a position of need. So in other words, they have a database of 300 people. They have a conference they're going to speak at. They have an event that they're attending where there's lots of people. And I'll give you the full flow of this. S is scarcity. So you're clear on the fact that you only need a certain amount of money. Your average ticket is X. So therefore you only need 5 or 6 investors. Or B, your other form of scarcity is time. So in other words, we're closing the fund on, June 15th as an example. And then Y is your allocation. So getting really comfortable asking the question, because you're going to get on a call, and you guys have seen this, you get on a call where somebody wants to take you to Pluto and back and discuss politics and what's going on with the war overseas, and what about inflation, and what about the price of, whatever it is. You could be like, you could be able to wrap all that up and say, got it. So I'm going to send you the data room. It has A, B, C things in it. But I got to ask you, if everything did check out, is there an amount that you'd consider investing on this deal? And if they're telling you, yeah, well, da, 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 then you're not going to dance for your supper the same way you would if they're like, yeah, if it all checked out, I'd probably do 200 grand. So broadly speaking, Michael, you want to make sure you have those 4 elements composed, but just like a traditional sales meeting, you want to have a discovery session, you want to have obviously a presentation, and then you want to be obviously asking for the commitment, right?
Tell me a little about the discovery. Let's break this thing down. Also, you mentioned something called a frame.
Yeah.
What is a frame and what is discovery? Let's just kind of break this down a little bit.
Sure. So Michael, you and I are sitting down. Okay, I'll give you one of my frames. Okay, you and I are sitting down. We get past the small talk, and again, my meetings are typically with people that we've vetted a little bit more. But even if it's somebody cold off LinkedIn, okay, or wherever it is, we get past our small talk, and I might say something like, "So, Michael, just for context, most of my investors typically have a few questions, like what are the risks, what are the returns, and what are the timeframes." At the same time, I'm going to have some questions for you, like what have you invested in before? How's it worked for you? And what are some of your goals going forward? At the end of the day, one of 2 things will probably happen. Either A, we'll figure out that this is perfect and we can actually work together. It'll be my job then to walk you through the process and make sure you're comfortable. Or B, at some point during our meeting, we'll go, yeah, this just doesn't make sense. And Mike, that's totally cool because what we do isn't a fit for everyone. So I guess what I'm asking is, if it's not a fit for you, are you okay letting me know that?
Yeah, sure.
So that's a frame.
That's the frame. It sets everything up. There's going to be some questions, but there's a structure to it, and there's a desired outcome. It's going to be either yes or no. So now you framed it.
And I've also built a sandbox. I've told you that you're going to have some questions for me. What are the risks? What are the returns? What are the timeframes? Because those are typically the most common questions.
Yep.
And I'm going to have some questions for you, implying that I'm going to ask you about, what have you invested in before? How's it worked for you? And what are your goals? Right? Like, but there's a bunch of little other questions. And that's what most people miss in this business is they think like this industry is more of a consultative, sort of like a Sandler sales type of a methodology. If you guys have ever heard of that, that's what, in my opinion, that's what works best in this industry, because it's consultative, it's relationship, it's solutions. You're not, the deal should literally close itself because you've done such a great job of exposing the gaps and how you potentially resolve that. Whereas you don't have to hard close somebody. Like this isn't you're not selling a, car. Like you're just, this is a different, by the way, in high net worth people that you guys deal with, I deal with, we don't want to be closed.
Yeah, that's exactly right. But that brings up another point, and that is, closing always means you're going to put them in a deal. But how much nurturing do you have to do with people? Because if you're selling a car, you're not going to
Yeah.
build a 6-month sales cycle. You're going for the throw.
No.
You're not leaving this lot until you buy this car. And it sounds like you don't deal with investors, and that's probably true. So, is there more of a multi-call process with some investors or most investors? And if so, how do you nurture that relationship so that they eventually invest? But not only that, what if they do invest and now you want them to invest more the next time? What does your kind of your nurturing process look like?
It's a really good question. So I go into every meeting with a potential investor and I'm looking for reasons for them not to be an investor. And actually, we do a lot of that. And to my point of qualifying people that I mentioned earlier with Garrett, is that we go out of our way to talk people out of meeting with us, if that makes sense. Because ultimately the sales cycle is so long and we have so many, and because you have so much lead flow, and eventually all your clients, once you have 1 or 2 successful exits, you get really good at just lead flow. It becomes easier. So vetting people out of the process early is important. And if you have those meetings, like I can tell you right now, at the beginning of a meeting, if you're 10, 20 minutes into it, and for example, your deals are 5, 10 year buy and holds, and people need a 6 month or 1 year liquidity, the way I've taught my guys to literally say, look, I mean, I'd love to talk more about this with you, but it just sounds like we're not going to be aligned on this deal. And most people are going to go, well, what do you mean? You're going to say, well, all of our projects are 5, 7, 12, whatever years, whatever it is that you're doing. And if you need your money back in a year, this isn't just going to make sense. Now, one of two things will happen. One, they'll appreciate that you're so candid and forthright, and they'll be like, well, no, I'm open to, whatever it is that you're talking about. Or they'll be like, okay, thanks for letting me know. And I've actually had those people become great referral sources for us. I literally had years ago, I remember the story like it was yesterday, a woman, sweetest woman in the world, just elderly. And there's no way she was going to be around long enough for this deal to mature. And so and she wanted to give me all her money. Like she just loved me. And I'm just like, I'm not gonna say her name, but I'm like, you know what? We can stay in touch, but I don't think this is a fit. And I wouldn't take a dime. I wouldn't even have her put in a dime. And her son called me. He put in basically the equivalent of that, just because he liked the fact that I was the way I was with his mom. So you just don't know where things are gonna go sometimes.
Martin, in an ideal, with an ideal team in place, what does it look like? Like, who are you hiring to manage the lead flow? Let's say you got a bunch of lead flow. You want to have some people in place to keep you from talking to these people that are maybe just wishy-washy. They're not good leads. Who should you have? And what do you like? Just run me through that a bit.
Sure. And everybody on this call hopefully knows this, but capital raising is a regulated activity, guys. So make sure that you're always clear with your state or your province. You're making sure that you're following your respective rules and all that. But just at a macro level, broadly speaking, there's two types of roles that are out there generating activities. I call those ODRs and MDRs. ODRs are outbound development representatives. They're the people that a lot of people use virtual assistants for this. They just don't call it an ODR, where they'll have people that are creating interest activity, and they're creating either an opt-in into an ebook or a video or whatever it is. And they're just like loosely like, yeah, I'm interested, market to me, so to speak. Those are ODRs. That is a very outbound driven activity. MDR is marketing development reps. So they're the ones that take those inbound leads and then they triage those people. So they just give them a call. It's like, hey, Garrett, thank you I know you downloaded our ebook on da-da-da. I know you attended this and da-da-da. You do a qualification just to figure out a few things. Are you accredited? Have you invested in real estate before? How did we connect? I just ask 3 or 4 different questions. And then those are the types of people that you potentially put on a calendar with most likely the operator with most of your clients and our clients, but sometimes with their partner, or maybe they have someone in an IR department. And then those are the people that then take the full consultative approach. And because that person, like if I pulled up my calendar for my team right now, I try to keep the people on my team that take those calls limited to maybe 3, maybe 4 of those calls on a daily basis. So they're fresh, attentive, and mentally present for that conversation.
Yeah, so we're talking about raising capital at multiple levels. I mean, I think what we're talking about is, what does it look like to really raise capital with a team in place with lead flow and triage, and I think that's fascinating. A lot of people aren't there yet. They're just starting out. They're like, their first question is, well, wait a minute, how am I even going to get lead flow, right? So maybe let's talk about that. And what is the first step? And someone hasn't raised money before. They now maybe they've gone through a course and they understand the mechanics of a syndication. They know how to talk about it, and their directive is to go out and leverage, their inner circle and their friends and family, and maybe to get referrals, maybe go some networking events. And really, what is the progression of leads, right? Because the lead is really anyone that they can talk to. What is your recommendation for someone just starting out to generate lead flow so they have some opportunity to talk to people? And then where does it go from there?
Well, I mean, the advice in the post-COVID Zoom economy where we're all comfortable with meeting each other on camera now, because I know you guys remember pre-COVID, it was all, in person, right? So I think the first step for everybody is, like I said, to get very clear on your personal unfair advantage so you can tell your story in a very specific way. Because as soon as, and by the way, your unfair advantage can literally be a combination of your personal story. And think about your personal story in the context of if you were like the hero in your own journey, and there were like 4 or 5 markers in your life that defined how you view the world, who you are as a person, what defines your beliefs, what are some of the things that you've overcome in your life. If you have 4 or 5 of those markers in your life, it gets a lot easier for yourself or someone on your team to start to really put together, who is Garrett, who is Michael. Like it gets a lot easier that way. And the reason why that's important is because that content creates the context of the people that will connect with you off the internet. So literally, if you get really good at telling your story and your why, when you then pour your investment thesis into it and the market that you invest in, all those things are different triggers just to help people engage. And to answer your question directly, initially, if you're just getting started, you should talk to everybody. Take a meeting with everybody, practice with everybody, because you don't know what good is yet. You don't have a baseline. So, initially, don't create too many barriers. One of my mentors says, first, you want to create flow in your business. And then when you have too much flow, then you start to add back some friction. So if you're brand new, just stand at that water well and just prime the pump just to get water going. And then eventually you'll start to create, you'll realize that you're meeting with a certain type of person that is never going to be a fit. Okay, fine. You want to be of service to them, maybe there's a free resource you can send them. Whereas if you get this really specific type of person, they're like your ideal avatar. Okay, well, great. What was it about the last 2 or 3 meetings that I had that were like this? Well, they all had the fact that they, maybe work in the medical space in common. Oh, okay, interesting. Or maybe they're all mortgage brokers. Oh, interesting. Like or they're accountants. Well, why does that matter? Well, because I was an accountant, so they immediately trust. See, you start to figure out those little things that work for you, and everybody is different.
It's interesting that you don't mention things like going on social media and stuff like that. There's a lot of people who think that raising money is pretty simple and the easy button is going online and social media. Now, I didn't hear you say that. So why is that not the easy button, or why is that putting the cart before? Why did you not mention those things?
Well, because social media is an amplifier. It's not the foundation. Look, the days of posting a cat video and getting 3 million YouTube views are gone. That you could have started an Instagram account 10 years ago and had 1 million followers without really doing much. Today, everybody knows that social media is the thing. So building a presence online is a different game today than it was then. But the people that do really well are the people that create a narrative around themselves in a way that automatically then attracts the right people. Now, you do that in person, you can do it at conferences, you can do it at events. And if it doesn't work in person, it's not going to work online, and vice versa.
That's exactly right. I mean, how can you amplify message if you don't even know what the message is? You can only figure that out by actually meeting one-on-one with people and figuring out what are investors thinking, what do they want, what are they afraid of, you mentioned the ideal avatar, which is marketing speak for, who is your ideal investor. So that's
Yeah,
got to happen first.
yeah, well, the reason you guys are successful and the reason why you guys have grown your equity business and your coach, everything is because you're on the street. You have the one-on-one, toe-to-toe conversations with the syndicators, the investors, the LPs, the GPs. Like you know what it is. So when you do a social media thing, it's in the context of that that's going to appeal to your ideal client, right? So you've done that market research already.
So let's talk about scaling that a little bit. Okay. So you can raise $500,000, $1 million, one-on-one with in-person Zoom meetings all day long. And in fact, you should. Now, if you want to 10x that and you want to raise upwards of $10 million, you do have to bring the conversation online. What have you seen work there? What is required to be successful as you're generating lead flow? We talked about lead flow. What are the mechanics for generating leads, capturing leads, nurturing leads? But then also there's got to be someone on the phones. We talked about that earlier. So what is that entire infrastructure that people who want to scale need to start thinking about?
Yeah. So as a starting point on first principles basis, the first thing that has to happen is you have to be perceived as a high status person, because no one will invest with you if they don't see you at or above their level. If think about the last time you gave money to somebody that, you know, you didn't see at your level, you probably thought it was more like a favor, or even worse, like charity, right? So when you're raising capital, you have to be perceived as high status, period, end of story. Now, if you're sitting there, you're like, well, I'm not high status. I mean, I've been a teacher for the last 20 years. I worked in construction. Well, that's BS. Everybody can be positioned as a high status authority, but within your specific niche. So for example, for me, I have a good reputation in PE and capital raising. If you put me in a room of business valuators, that's not my niche. I'm there to learn. I am a student. I am not the teacher in that context. So in that room, I have very little status. Put me in a room full of, I don't know, people that are lawyers, or you understand, like you take me out of my element, I quote unquote lose that status. So the point is, how do you take the status of somebody from a specific area and then tie that expertise to what you're doing today? So I'll give you a prime example. One of my clients owns a towing company. Towing has nothing to do with real estate. Well, one of the things within his towing business is they've driven millions of miles all over the state. So he has trucks everywhere. So he knows the good neighborhoods. He knows where things are good. He knows where things are bad. Based on where all the issues are, they understand that those are better markets than others. So the fact that he's got his towing company, they're out bird dogging deals, that now is an unfair advantage within his business and his ability to get deals. He knows all the trades, he knows all the guys. That all of a sudden, taking that, putting it into real estate, puts him in an authority position, and therefore gives him status when he's out in the marketplace. So that's the first thing before you actually go try LinkedIn or Instagram or TikTok or any of this stuff. It's all, those are all amplifiers of either a good message or a message that's going to fall flat. But if you can't get your message to resonate one to one, or even in a small setting where you can tell that people are truly like nodding, engaging, and you can tell they're like, oh, I understand why Garrett does this now because of this. Like, until they have that, like that logical sequence in their mind clear, it doesn't matter how much money you pour into conferences, seminars, advertising, none of it will work until people are until you can be clear on why you're the right person in that role doing the thing that you're doing. That's the first thing.
Yeah, so the first thing is you have to have status. So if I'm, for example, a medical doctor and I get into syndications, I figure syndications out and I do a syndication, I immediately have status in real estate with other doctors. So other doctors will be more inclined to invest with me because they resonate with my story, and I figured something else that no one else does. So it's
Yeah.
not hard to get status. What else if I want to generate lead flow or I want to start getting into marketing more and social media? What should I consider next?
Yeah. So once you've established your status and your position in the marketplace, so people will actually listen to you. Because think about how many times you scroll through and you're like, I'm not listening to her, I'm not listening to him, I'm not listening to him. Like they may have good messaging, but you don't perceive them as an authority, so it doesn't matter. So that first 2 or 3 seconds on your phone, on the TV, on a computer, whatever it is establishing authority and status. Once that's established, the next piece, and this is fundamentally different between capital raising and almost every other sale out there, is the best capital raisers are the best educators. So can you take what you do and explain it in such a way where people are like, I totally get it. Prime example, rather than talking about cap rates and valuations, why not say, hey, so why do I love real estate? Well, it's simple. For every $1 that I create in value, adds $20 to the purchase price of the asset. Like that's tangible, that's a 5 cap, right? That's what a 5 cap is, right? But that's a simpler way of saying for every $1 I add, it creates $20 in value. It's not like, oh, we're gonna compress the cap rate from nobody understands these things. So step one, status. Step two is be able to very simply explain what you're doing.
Now, is your avatar in many cases someone who does not know anything about syndications? Are you?
No, not. Well, actually, it almost doesn't. I mean, I look at my business. I mean, I have guys that have 8-figure, 9-figure net worths that are investors, and we have guys that are doing their own deals and they write $100,000-$200,000 check for our stuff too. So it's kind of all over the place. But I can tell you right now. So here's a fun fact for you: the average American, or North American for that matter, has a comprehension level of grade 5 for reading. Okay, most of the stuff that's written on LinkedIn is grade 13. So right out of the gate, you're already you're dealing with a subset of a population. So if you take that to Facebook, it's the same thing. So biggest mistake people make in the capital raising space is they think they have to sound sophisticated and technical and all this stuff. You need to be able to go there in case you get toe to toe with somebody that has to take you there. But 95% of people, even high net worth guys, in my experience, maybe you guys have seen the same, they just want to have a basic back of the. I was talking to Ken McRoy. Ken McRoy, to this day, him and his partner Ross, they do a thing on the back of the napkin, and they're pretty much 90% if they're going to keep doing it or not. Like right there, they know.
Yeah, you gotta keep it simple. I love it.
Yeah,
Well, it's been
yeah,
great.
and then
Yeah, go ahead. Finish the thought.
and then just the last thing is once you have a status frame that works, that attracts your ideal avatar, and you have that education, that nurturing platform, which I know you guys have mastered. You guys have your educational platform mastered. Once you have that educational element to nurture that person through to buying their first building or figuring out how to be an LP, once you have that 1-2 punch, the rest is literally just you have a meeting and it's like I do with my daughter. Do you want peas or carrots? Like it's like a byproduct. It's not, again, it's not if or when. It's not if you're investing, it's when and how much.
Yeah. It's been really cool, man. Thanks for just bringing it on the capital raising side. How can people connect with you, find out more what you're all about?
Yeah, my website's the best place, marcindrozdz.com. And I have a book that was a best-selling book on Amazon called Unlimited Investor Leads. But if you go to the website, you can get a free copy there.
Go ahead and spell that just for everybody here so I can easily find. We'll put in the show notes as well, but go ahead and spell it.
Yeah, well, my name is MarcinDrozdz.com.
MarcinDrozdz.com. So check it out. Go grab that book for free. So great having you here on the show.
Yeah, it was really fun. I appreciate you guys.